Good evening, traders. Today I'm going to make a video on a little bit more specific what I look for in the market, working my way down from the higher time frames to the lower time frames, how I frame my setups, and more specific what I look for in the market. And today we're gonna discuss this trade where I'm selling right up at, I think it was Wednesday's high. Yeah, Wednesday's high is here, covering right below this equal lows down here. And I'm gonna start off with some proof of execution. Here you see my executions. I'm selling here and covering right below here. So where do we start? Well, first of all, I'm gonna remove this. Yeah, first of all, uh, I don't use the high time frames so much. I'm primarily a intraday trader, so I focus on intraday swings in the market. But I prefer to use the high time frames liquidity pools to hunt my reversals, where I primarily we look for reversals, right? Or at least I do. So if we going to what's happening here? Yeah, jumping over straight to the 4-hour chart and scrolling back here. Yeah, so this is the Australian dollar, US dollar, and Monday is here from this week. So on this time frame, I'll look basically for if we have some important liquidity rates, more important imbalances created. As I said before, I don't use the high time frames too much. I primarily focus on, intraday liquidity pools like previous days liquidity, sell side and buy side, session liquidity. But if the week starts here, and first of all, I see during Friday we have this liquidity rate right above these highs here, and I think it was high impact news during Friday, and we see the market breaking down. Very displacement here, right? The market breaks down, purchasing buy side and breaks down. So when Monday opens up down here, I'm gonna use this range from here to first of all identify my premium and discount levels. This is a kind of large range, you know. And I also see we have this breaker block here. You see low, taking out a high with a lower low. So this down close candle here, I can use that as my breaker. If you don't know what a breaker block is, I really recommend to learn what it is, because it's a repeating signature in the market. And I give ICT all the credit for learning me these concepts. You can watch his YouTube channel for learning all this stuff I'm gonna show in this video. But I'm identifying this is my breaker. Market has broke down and created a low here. So this is gonna be sell side. And next, I like to use the 50-minute time frame for my, can I say, intraday view of the market. I think you're catching nice price action from this time frame. We know we had a high time frame liquidity rate here. Market broke down. And Monday, I wasn't at the screen. I was not trading this day. So we can skip through that day, but basically Monday trading a high, low, liquidity raid, filling up into the breaker, doing Tuesday and selling off again. This high here created during the Tuesday. If we jump back to the think of what this high here doing. It's trading up into this range, rebalancing this sell side imbalance from basically this low to this low, here and here. So this price or day comes up to rebalance a higher time frame sell side imbalance. This high here going to be a long-term high for me because it's has basically rebalanced a high time frame imbalance, if you get what I mean. This is a high time frame from what I prefer to trade. So to me, this is gonna be useful because I don't expect this high to be rated in the future price action. So yeah, you can just write it down here, long-term high. And if we jump back to the 50-minute time frame, we have a long-term high here. Price sold off during Tuesday, and what? It also took out liquidity here in form of daily liquidity here and broke down again. So prior to when I'm coming to the screen, I came to the screen before the London session. This red box here represents the London hours, and don't ask me why the session indicator is moved by around 1 hour here. The London session actually starts here at 8 o'clock in the morning my time. It's just move it to the right 1 hour, but that's not important. The importance here is I know we are in a kill zone, the London session. So if I'm gonna build my idea and I'm coming into the screen when price is maybe around here in the morning, what do I see? Well, we now had a large sell-off from the Tuesday, and the Asian session representing this green box here, we had equal lows down here. Very, very clean level of liquidity, right? A session liquidity. Whenever price is leaving a consolidation with two clean lows, or a clean level of liquidity, I'm immediately thinking, okay, this is probably gonna be a market maker buy model or a sell model. Price should reach back down into this level in the future because we're gonna sell back our longs, right? And basically what I'm doing, I'm thinking of a reversal somewhere. Where should the reversal occur? It can be a area of imbalance, it can be a liquidity pool, or it can be both. So I'm hunting areas where a reversal should happen. That's what we do, right? We want to see price reverse somewhere. And we know from the mentorship that price likes to reverse at specific pools of liquidity, like areas of imbalance or a short-term high or low, basically, right? So if you're going back to look on the 50-minute time frame again, once again, what has happened during Tuesday? Price took out this buy side here, broke down very, very strong, and created what? This high here is interesting. Why? Because it doesn't rebalance something. This area here from this low and this high, it's not an area of imbalance because this candle's wick has came down and snapped back up. It's already balanced between this low and this high. So this high here is not an intermediate term high rebalancing old imbalance. So I'm gonna identify this as a short-term high. Short-term high here. And basically how I see it as short-term highs should provide liquidity. That's just pure liquidity for me. It's an old high. It doesn't really any of importance. It's not rebalancing anything on this specifically time frame. It's just an old high. So this is gonna be liquidity for me. Liquidity here. But what about this area from this high to this low? This is an area of where price is really open. You see, it's a gap between here and here, here and here. And I think if you jump to a 45, I think it's more cleaner. Yeah, you see. Here we have a pure open imbalance from this candle's low to this candle's high here. So we can just, for illustration, draw some lines here. Do it like this. Changing color, representing some imbalance. Here and here. We also have some imbalance up here, actually. So we can identify that too. Do it this way. Yeah. Then we jump down to the 50-minute time frame again. So I have pointing out two areas of imbalance, sell side imbalance. We have draw on liquidity here. And now what? When I come to the screen, when price is pumping up here, I've already identified this equal lows down here from the Asian session. Price is reaching up into this area here where I expect a reversal to happen. This area could potentially be an area where price is going to go from buy side to sell side. That's something we learned from the mentorship. That's nothing really magic about it. We just know that, right? So I think we jump down to our, I think I took my entry on the 4-minute time frame. We have identified a higher time frame level of liquidity right here, right in this area. When price reaching up into this area, I'm watching price how it reacts to it. And what do we see? We have price consolidating down here. It's leaving the consolidation, coming back, rebalance, coming back, rebalance. You see how the price respecting the buy side imbalance every time it creates a new high, coming down to imbalance, pumping up, and we enter this area. What's happening up here? Well, I see this. Price is pumping up, coming down to rebalance. But something happens here. It breaks. It breaks down. And leaving what? Sell side imbalance. Right between this low, and basically this high. But this area here is really interesting because we have hit our higher time frame, area of liquidity here, where I expect a reversal in a bearish market. So I'm basically just pulling things together. And for those who know, this is also a market maker sell model. Price consolidating down here. We have down here what? Sell side liquidity. So sell side liquidity. Right here. So we have a original consolidation. It leaves the consolidation, reaccumulation here, reaccumulation, more longs here, reaccumulation, more longs, and up here, our smart money reversal, right? So we identify it like this. Little box here to represent a reversal. SM reversal. We have our market structure shift right here. Price coming up into this fair value gap here and sells off. Note how every time price creates a fair value gap, it respects it. Every time. So you don't need to be a seller right up at this reversal here, because if you have identified this as a smart money reversal, you can actually be a seller right when it comes up to a premium. You know, drawing a fib from this high to this low. Oops, sorry. Reaching up into a premium. And so on. So I hope this is enough to get a little bit more how I identify setups, what I look for, why I look for it, and yeah, so on. So that was it for this time.